Welcome to The Physical Edge, a series of interviews about the physical gold fund and the intricacies of the physical gold industry with Alex Stanczyk, Managing Director of Physical Gold Fund. Hello, I'm John Ward on behalf of Physical Gold Fund. We're delighted to welcome you to the third podcast in a series we're calling The Physical Edge. In these interviews, I'll be talking with Alex Stanczyk, Managing Director of the Physical Gold Fund. Our focus will be the fund itself and related questions about the physical gold market. So this series is primarily for non-US investors who are considering participation in the Physical Gold Fund. Alex Stanczyk has been involved in the Physical Gold Fund since its inception, providing core aspects of the fund design and structuring, as well as coordinating the strategic relationships required for launching the fund. Prior to this, Alex played a key role as designer and advisor to the world's first non-bank private custody precious metals fund, the Luxembourg Precious Metals Fund. And for the past 8 years, he's served in a range of capacities for the Anglo-Far East group of companies, focusing especially on the logistics of gold acquisition, transportation and vaulting. Throughout this time, Alex Stanczyk has lectured globally to institutional and government audiences on the role of gold in the international monetary system. Hello, Alex, and welcome.
Hello, John. Great to be with you again.
Today, Alex, we're going to discuss a critical aspect of the physical gold market, and it's the question of jurisdiction. That is, the location you choose to purchase and store your gold. Could you first explain why jurisdiction matters when an investor or institution is dealing with significant amounts of physical gold?
That's a great question. So let's begin by laying a foundation for what gold is. According to the IMF, gold is the only case of a financial asset with no counterparty liability. So in other words, gold is not going to default on you like some other financial assets could or might under situations of like a liquidity crisis or institutional failure or anything of that nature. Another aspect of gold that investors are finding interesting, especially right now, is that in a negative interest rate environment, with right now some 7.9 trillion in government bonds are giving a negative yield, gold is looking more and more attractive. So some argue that gold has no yield, so it's not a good investment. But that particular argument that gold has no yield is actually true of all forms of money, including the USD. However, right now, as I just mentioned a minute ago, in a negative interest rate environment, for many people around the world, owning gold is now no different than cash or bonds, only it doesn't have the risk of default. So in our view, a modest allocation of a portfolio to gold acts as a diversifier and a truly non-correlated asset. And I'll explain what I mean by that in just a moment. But it acts as insurance versus paper and digital assets in the portfolio. So some reason gold makes sense as insurance. Number one, it's not subject to hacking. It's not subject to cyber warfare. It's not subject to disruptions in a particular exchange, any kind of a financial asset that a person might have or an institution might have. Obviously, if they want to have liquidity, they have to be able to buy and sell and trade that instrument on an exchange, unless, of course, they're dealing directly with a fund like us. Also, during a liquidity crisis, gold is not going to fail as an instrument holding value. It will maintain its liquidity because there's a global market for the physical gold, regardless of what's happening in financial markets. Gold is truly non-correlated. And what I mean by that when I say that is it protects against failures in banking or financial services counterparties because it ensures liquidity, even when other things may become locked up or perhaps they're crashing in value. So for an example, if we look back at the 2008 global financial crisis, there were many hedge funds, for example, that were completely unable to trade because their prime broker or primary dealer had stopped trading. Gold is not correlated to financial systems at all. There is a physical market for gold regardless of what those financial markets are doing. And if you are dealing with the right counterparties, as physical gold fund is, you may not be subject to those kind of things. So, for example, most gold funds are buying and selling their gold directly through banks, and those banks under a liquidity crisis could have those kind of problems. But if you're dealing directly with refineries, like physical gold fund is, then we are bypassing the banks and bypassing that potential risk. So next, gold protects against sovereign risk. So for example, changes in currency values. Recent examples are the Russian ruble, which basically crashed in value. And if a Russian citizen had or institution had invested a portion of their portfolio in gold, that would have protected their position because the value of gold in that currency went up substantially as the currency crashed. Brazilian real is another recent similar case where exactly the same thing happened. So in summary, gold is an asset class all of its own. Because of its physical properties and use, it's a hard asset with no counterparty risk, and it has excellent liquidity compared to other hard assets such as real estate, which may take you a while to sell, for example. Gold's got almost a 24-hour, very deep and highly liquid market. Some jurisdictions provide a better framework than others to take advantage of gold's attributes, and I think that's what we're going to talk about today.
So, Alex, the question of jurisdiction is clearly important for Physical Gold Fund, of which you are managing director. And the fund has choices about where it manages its gold operations. What criteria have you used to select the optimum jurisdiction? And which location did your review of those criteria eventually lead you to?
As of now, we've chosen Switzerland as our primary jurisdiction for vaulting. We have looked at a number of different jurisdictions, and we reserve the ability to add additional jurisdictions in time should it become warranted to do so. However, the criteria that we used when we were evaluating the jurisdictions that we could choose from was, first of all, political stability. Obviously, we wanted to make sure that there was a stable government system in any jurisdiction we were considering, that it had longevity, it wasn't subject to continual regime change, those types of things. Next, we looked at the economic stability of the jurisdiction. This was clearly an important criteria. Another thing that we looked at was the proximity of the jurisdiction to global markets, precious metals markets, both from a refining, transport, security, etc. Next, we looked at precious metals infrastructure and history of that particular jurisdiction, what they had in place in terms of financial markets supporting gold, physical markets supporting gold, physical operations supporting gold. Next, we looked at the rule of law. So in other words, does the law in practice in a particular jurisdiction provide for the protection of assets, and does it provide for recourse? And in particular, we looked at how does that work when it comes to gold, because gold is looked at differently depending upon where it's stored, whether it's stored within a bank or not within a bank, and whether it's considered a financial asset or physical property by a particular country. So the next thing that we looked at was, does the jurisdiction have any kind of history of confiscation of gold? Now, a lot of people think that this may not be that important, or they don't take it very seriously. And while we don't necessarily think that the likelihood of something like that is high, it is something that we weighed into the equation. We try to take as many factors into consideration as possible. And some jurisdictions have in history shown that they were willing to confiscate gold. So that was something that concerned us and was part of our criteria. Finally, gold is a strategic asset. And what that means is that during wartime, gold actually becomes money of sovereigns. And I'm not talking small, perhaps regional wars. I'm talking about in a world war type kind of a scenario. Countries typically stop accepting each other's paper and go to gold. So in that kind of a situation, countries start looking at gold as a strategic asset. There's a reason that in the CIA fact book, when it's listing strategic reserves of a country, it talks about cash reserves and gold. So we looked at any jurisdiction we were looking at, we wanted to look at its defensibility during wartime.
Well then, in that context, Alex, let's talk about Switzerland itself. What are the attributes of this jurisdiction that make it especially attractive for the gold investor?
First of all, John, the values of the Swiss people regarding freedom and the ownership of private property were very interesting to us. And we find that this stems from their history as a fiercely independent and free people. Switzerland in particular is particularly politically stable. The Swiss have resisted efforts to bring it under the Euro system. Many Swiss feel that doing so would jeopardize their freedoms and sovereignty. Switzerland is economically resilient. It's done fairly well considering the morass of debt and solvency issues facing much of the Euro system today. Its currency is still considered globally as one of the safest assets aside from gold which a person can own. It retains a strong rule of law. We consider this to be extremely important for the protection of physical private property such as gold. And finally, Switzerland is the global hub of precious metals refining. Not everybody knows this. Unlike some other jurisdictions which are new to gold, Switzerland's got a substantially developed precious metals infrastructure. They've got over 200 years of experience doing it. The largest refineries in the world reside there, and they handle a tremendous amount of precious metals flow. So speaking of gold as a strategic asset, and I want to emphasize this a little bit to kind of highlight the way the Swiss think, and this went into our consideration, or this became part of our consideration, is as I mentioned before, during large-scale war, gold becomes money between sovereigns. So we looked at this from gold as a strategic aspect standpoint. What many do not know is that the Swiss have got a long-standing military history, and Switzerland has not been successfully invaded for almost 700 years. They've maintained neutrality through several world wars. There's a story about a German military attaché right after the surrender of France. This German military attaché approached the Swiss chief of staff, and he basically said to the Swiss chief of staff that it was time to accept a German-led Europe, and that the Swiss should allow German troops access to Switzerland to come through there. And the story goes, the general looked the attaché up and down and simply said, "No one comes through here." And then he went on to explain to him that if Germany invaded, the first thing that they would hear would be the simultaneous demolition of every strategic rail system leading into the country. This sort of belligerence to invasion and determination and resisting affronts to their freedom, it's really deeply rooted in their culture. To this very day, in Appenzell, Swiss men still carry swords when they turn out to vote to symbolize their willingness to fight for their freedoms. They have a very martial or military culture. National sports that are kind of highly revealed in Switzerland are things like wrestling and rifle marksmanship. They have hundreds of years of experience in military science. They were known to field the best soldiers available. This goes back all the way to the 1300s. There's another story from 1315 where 2,000 heavily armored Austrian knights tried to invade Switzerland through the Morgarten Pass. They did this with the intention of imposing taxation and territorial control, etc. And what happened was that the Swiss peasants defended that pass versus these 2,000 heavily armored Austrian knights. As these knights came through the pass, the Swiss came down on them with tree trunks and halberds and axes and used rock slides and basically destroyed these knights almost to the last man. So today, there's a saying, the Swiss don't have an army, the Swiss are an army. And what that means is that every Swiss citizen is part of a standing civilian army in which they're required to serve for 30 years. Every military-age male is required to keep a well-serviced military-grade firearm in their home. They're all trained in how to use it. All 650,000 members of the army are prepared to mobilize for war and be at their mobilization points in less than 24 hours. One Swiss army officer is quoted as saying, "The foremost battle is to prevent a war by making the price of victory too high. You must understand that there is no difference between the Swiss people and the Swiss army. There is no difference of will. The people are prepared to fight, even against their own government, if the government were to capitulate." So this tells us something about the Swiss mentality. And these types of things were part of what we looked at. Some other things that are interesting to know about Switzerland, we read while doing our research on Switzerland and the other jurisdictions we looked at, one of the books that we came across talked about geographic tactical and strategic considerations. And Switzerland in particular, the country is basically ringed by mountains, and it forms a natural geographic defense system. All of the roads, bridges, rail systems, valleys leading into Switzerland are all intentionally pre-staged with explosives. And the reason they do this is that if Switzerland were ever to be invaded, it allows for the Swiss to intentionally destroy all access moving into the country. They will blow up every road, every bridge, every mountain pass, if necessary, in order to prevent anyone from invading Switzerland. There are over 3,000 points of demolition, and this is the officially printed number, although some experts think this number is higher, maybe even twice as high. There are over 12,000 pieces of artillery stationed in the mountains around Switzerland. They're manned around the clock. These pieces of artillery are actually aimed at their own infrastructure, such as tunnel mouths, bridges, rail systems, etc. All of these guns are pre-gridded for fire. So, for example, if they did demolish bridges, etc., trains or rail lines coming into the country, if anyone were to try to go to repair them, these guns are aimed pre-gridded at those locations, so you can't approach them anymore. Entire mountains in Switzerland have been hollowed out, and they can hold entire divisions of soldiers. They store munitions to fuel and supply a fully mobilized army for over a year. Every public building in Switzerland doubles as a bomb shelter or fortified military facility, and over 95% of the population has access to bomb shelters designed to withstand nuclear blasts. I'm emphasizing these points to highlight the way the Swiss think and the way they approach matters of security. It's simply a part of their culture. The vaulting security for valuable property such as gold, diamonds, and art in Switzerland is considerable. So when reviewing the other popular jurisdictions for vaulting, none of these jurisdictions come even close to comparing to these factors. For example, Hong Kong is a very popular destination for people vaulting gold, and so is Singapore. Now, while there's nothing wrong with these jurisdictions, and we may in fact vault in these jurisdictions at some point in the future, the point that I'm trying to make with that is that none of these have a history of defending against invasion, and they're very close to for example, to China. If I'm going to store gold, Switzerland stands head and shoulders above the other options.
It's an extraordinary portrait of country. Thank you. I'm curious now to know if there are any particular advantages of Switzerland as a jurisdiction for physical gold fund in particular.
Yes, there are, John. And for the physical gold fund in particular, we've got long-standing relationships in the industry that we've developed in Switzerland with some of the largest refineries in the industry, with some of the what we consider to be some of the best vaulting operators in the industry. Other things that are important as far as physical gold fund is concerned is that the vaults and the refineries are very close to each other, so we can transport metal back and forth between them very short distances. One reason why this may be important is that these refineries, many people don't realize that these Swiss refineries process around 70% of the world's annual metal refining capacity. So we consider Switzerland to be at the core of the precious metals industry, and it's a really solid foundation for liquidity globally. What stands on the other side of these refineries are all of the bullion banks and all the largest jewelry manufacturers in the world. And because of that, regardless of what's happening in financial markets, there's demand on the other side of these refineries. And that's a really important aspect to us because it sort of gives us an extra degree of resilience in the way we view it to potential crises in terms of liquidity crisis or fluctuations in market stability. And then finally, it also helps us to reduce costs of operation.
So one last question, Alex. Whenever we discuss the vaulting of gold, I notice you and your colleagues at Physical Gold Fund always place a huge emphasis on vaulting outside the banks. Why is this so important?
This is a great question, and this is something that we've emphasized in the way we've structured products for many years now. There was a time when we said that it was important to vault outside of the banks to protect against liquidity crisis when people would look at us and they didn't really understand what we meant by that. And essentially, it's become more and more clear today that if you've got your assets held with a bank and there is some sort of a liquidity crisis, then there may be some issues in terms of those assets being locked up or unable to trade or whatever the case may be, as we saw in 2008. Another important reason for this is that in many jurisdictions around the world, bail-in legislation has already been passed, which allows banks to seize the assets of depositors to recapitalize the bank in the event of a failure. And while this may or may not apply to physical gold now, it's still a really disturbing trend and something that we were concerned about. So that's another reason. In Switzerland in particular, gold in banks is considered a financial asset versus physical private property. And that's a really important distinction for us, is that according to the Swiss Bank Act and the Swiss Bank Ordinances, essentially banking business activity are defined in the Swiss Bank Act. The Swiss Bank Act does not govern the private storage of gold bars. And we're talking about non-bank vaulting in Switzerland. So private property, including precious metals that are stored with private security storage companies, are protected under the Swiss Private International Law Act and also the Swiss Civil Code. So under Swiss law, the point is that under Swiss law, there is no difference regarding what physical property I'm storing is. It could be precious metals, fine art, wine, etc. But those things are not considered financial assets. They're considered private property. And that is one of the key reasons to store outside of a bank. So this is one of many things that we've looked at, which in our view makes Physical Gold Fund a leader and innovator among the gold funds and ETFs of the world today.
Well, thank you, Alex Stanczyk, Managing Director of Physical Gold Fund. And thank you to our listeners. We look forward to joining you again soon. You have been listening to The Physical Edge with Alex Stanczyk, presented by Physical Gold Fund. Recordings can be found at physicalgoldfund.com/podcasts. You can register there for news of our upcoming interviews with Alex Stanczyk.